energy storage has so much potential to unlock both innovation in the grid, but also like really address some of like the key affordability concerns. Because there's parts of the day in a lot of places in the country there's negative net demand. You've an abundance of solar, so much so that you could get paid to take electricity. This is the idea of the duck curve, right?
Yes.
And the sunniest hours of the day, you have negative net demand. You have more being produced than being taken, and electrons have to be curtailed.
Welcome to the Solar Maverick Podcast. I'm your host, Benoy Thanjan. Today's episode was filmed at the ACORE Finance Forum in New York on May 2026. If you're not familiar with ACORE, it's the American Council on Renewable Energy. They brought together leaders across finance, policy, and technology to accelerate the transition to a clean energy economy. My company, Reneu Energy, which I'm the CEO and founder, we're a solar development company and consulting firm, is a proud alumnus of the ACORE Accelerate program designed to support emerging clean energy companies through industry connections, mentorship, greater visibility, and access to a broader clean energy marketplace. At the Finance Forum, I had the pleasure of sitting down with James Gutman of S&P Global to discuss the findings from the Clean Energy Investment Trends, a report produced by S&P Global Energy for ACORE. The report examines where capital is flowing across the U.S. energy market and how investors are responding to changing policy, tax credit rules, FIAC for an entity of concern, regional power market dynamics, supply chain restrictions, and rapidly growing electricity demand. James brings valuable perspective from S&P Global, where his work helps investors and energy leaders understand power markets, infrastructure trends, project economics, and the risks shaping billions of dollars in capital deployment. He's also president of the Young Professionals in Energy in New York City, where he helps and connects and develops the next generation of energy professionals. In this conversation, we discuss the record levels of investment entering the U.S. energy market, why Texas continues to lead renewable energy deployment, and the growing importance of solar and battery storage. We also explore how data centers are reshaping electricity demand and power procurement, why behind-the-meter generation is growing, and why transmission and interconnection may be the most important and also most overlooked constraint on America's energy future. Finally, James shares his perspective on whether the renewable energy industry can move beyond its reliance on subsidies and compete increasingly through market fundamentals, innovation, and declining costs. This is a timely conversation about the future of energy investment, what developers, investors, policymakers, and energy customers need to understand. Let's get into it. Hi, this is Benoy, your host of the Solar Maverick Podcast. We're here at the ACORE Finance Forum, Day 2, and I'm so excited to have James Gutman. He's a senior principal analyst, Energy Capital Insights at S&P Global. He's also the president of the Young Professionals Energy, New York City. James, welcome to the podcast. I'm really excited to have you today.
I'm really excited to be here. Thank you, Benoy.
Yeah, definitely. I've known James for a while through YP, and he's done amazing work there. And I love, too, your content on LinkedIn. And I learn a lot from, the thought leadership that you do. And thank you for making time to talk about the S&P report that S&P partnered with ACORE. And if you could maybe introduce yourself, if people are not familiar with S&P Global Energy, and then we could talk about the report.
Excellent. So my name is James Gutman. I'm actually, as of May 1st, a senior principal analyst at S&P Global. But that is, that's a small little change in title. It doesn't mean a whole lot. I focus on basically the intersection between commodities and infrastructure in the energy industry. I mean, it's such a complicated market. You have power markets in the United States. They're very regionalized. You have different ISOs. Think about ERCOT, PJM, SPP, MISO, California, New York, New England. And they all have different characteristics, different revenue stacks that developers and energy producers can take advantage of. And then we also focus on, the big ones, oil and gas, these international markets. And investors have to kind of have an understanding of what those outlooks are going to be if they want to develop assets and if they want to make choices to make billion-dollar investments, multi-billion-dollar investments.
Yes.
And usually they're not using their own money. They're using pension funds. They're using money that is highly sensitive. So they have to get it right. And we help make those decisions at SMP through our research. So that's kind of what I do professionally. We do research advisory. So we write reports and we do consulting, such as this ACORE report. And then I also have the pleasure of being the president of Young Professionals in Energy New York. And I like to say we do three things really well. We do networking. So actually, every month we do a happy hour. We invite people to come together and meet each other in the industry and talk about what they're doing and create new connections, maybe help them plan their career through developing relationships. The second thing we do is thought leadership. So YPE has been trying to put together events where we have panelists and we talk about the kind of the frontier issues. So we've done stuff on hydrogen. You came to one of our events on solar not too long ago that we did at Troutman. We've done events on EV infrastructure. We had Revel come right when they were on the cusp of developing their Queens charging infrastructure, which has been a huge boon and for a lot of our hardworking rideshare drivers in New York City. And then, of course, we have our mentorship program where we bring together people who are in college or starting their careers with people who are more mid-career, late career, and try to create these relationships so people can plot out a career that they feel is meaningful and gives them success. So those are the things that I do. And we're here today to talk about this ACORE report. We're at the ACORE Finance Forum, and it's been a couple months that we've been working on it. It's such a pleasure to have it released and have it being talked about, because I think we have a lot of really interesting insights that come at a pivotal kind of inflection point in the industry.
Yeah, I agree. I mean, it's been interesting to hear about the report and the major findings of it. And if people are not familiar with ACORE, it's the American Council of Renewable Energy. James worked on a lot of different aspects of the report as the senior principal analyst. Which
well, I was a senior analyst when I did it. Yeah.
But your promotion to senior principal analyst. But can you talk about maybe the key findings of the report? Obviously, like right now is a huge time in energy, in renewable energy. Obviously, we're going through a conflict in Iran. Obviously, oil and gas prices have spiked. Renewables, it's a challenging environment with the ITC, the big beautiful bill, changing the incentives, and then fiat.
Before I get into the key insights, because we don't have a lot of key headline numbers, but the report does a lot. So I'm going to talk about what the report does.
Sure.
So the report, we talk about transmission. We do some case studies at different transmission projects in the United States. Transmission is one of these major parts of the energy industry that people don't talk about. But the grid itself is, you can say, the most complicated machine and requires decades, dozens of years to plan some of these lines, billions of dollars, and you're really connecting a lot of these assets. And transmission is one of these enabling features of the grid for new development. So we talk about that. We do like a scorecard of the different states and their what allows them to kind of enable different types of renewables. So we talk about solar, wind, batteries on the utility scale in different states. So, and then we kind of do this in a 3 different layers. So we look at the development conditions, we look at the market potential, we look at the project economics, and what is really enabling states to enable renewables. And who would you guess to be number 1?
Texas.
Are you looking on my screen?
I'm not.
You're not looking at the screen. So Texas we have as number 1 as for utility, solar, BESS, and wind. And then after that it kind of gets a little mixed as to who's the number 2 in various things. But California does really well for utility scale solar, utility scale BESS. Obviously, if you're looking at wind, what really matters is not necessarily always the market conditions, but the availability of wind. So if you don't have, so you can imagine like, Texas is good because you have kind of a lot of, I guess, my geography of the United States isn't so strong, but I guess some wind blowing off of the mountains kind of goes into Texas and is really good. But also like Wyoming, New Mexico, Illinois, Oklahoma, those places might not have a lot of sun. They might not be really good for utility scale solar, but they are very, very good for wind, and you have just tremendous capacity factors there. So those are some of the elements that kind of feed into the market potential. And then development conditions, I think, the ease of permitting, the kind of revenue stack that you can get from the market. People really like ERCOT. You don't necessarily have like capacity, but capacity doesn't really help renewable developers all that much. I think what they want is a market that, that gives them clear signals that they can sell into. And so I think that's one of the really strong points of this report, that we really kind of dive deep into what creates comparatively good markets in the United States for renewable development. And then obviously we get into the broader kind of federal policy framework. One of the things everyone wants to talk about is the OBBBA, the One Big Beautiful Bill Act, right?
Yes.
And obviously it brought a lot of things that are perceived as negative, but I actually have a good line on this, and this is not in the report, but I would say that actually this is the second best tax equity budget after the IRA. I mean, we're kind of comparing, when you look at the OBBBA and the kind of current framework and the current situation, you're comparing it to what the IRA was. Right? And the IRA was just so fantastic, and it created such positive momentum in the renewable space. But, there was this period before the IRA too that existed. And I think while there might be significant headwinds, and we talk about this for wind and solar in the IRA, they're phasing out those credits. You've prolonged, or you have maintained support, I should say, for nuclear batteries, hydro, and geothermal. And I think it's interesting that batteries is one of these things that was continued. I think there's a recognition that both this is important for the grid, but it's also important for American manufacturing. American manufacturers need to get battery right. So creating a ecosystem that creates demand for batteries will, for example, you see this, you look upstream of this, there's a big push for rare earths and mineral development, right? And so, it creates demand for lithium production in the United States. But just focusing on batteries, the complexity there, because a lot of developers might not want American batteries, the Chinese batteries and Chinese solar and Chinese everything is so competitive on price. So one of the things that developers and investors are really worried about, and this report talks about it at length, is FEOC. Now, what does FEOC mean? I'll explain my acronym.
Sure. Foreign
Entity of Concern. Now, we're at the ACORE Finance Forum. This is one of these words that has been talked about a lot. Would you say, I think every panel has talked about FEOC.
Oh, for sure.
And what, I think that this is one of these things, because I feel like, there's some clarity on it. There's not a total amount. People are saying that I've never, I'm a researcher, I'm not developing projects, but, people have to make declarations about, the kit that they're using, and, creates a lot of risk, right? Are you going to put a bunch of money towards a project? And the whole thing about tax equity is you have this capital outflow, and you are expecting to get your money back if it's not direct pay. Like if you're not like a tribal nation or a nonprofit, you're expecting to get that money back by, putting it against a tax liability, right? Or by transferring it, selling it to someone who has a tax liability. And there's a lot of concern that they might not be able to get that might get pulled back, that you might not be able to get your money back, and someone's going to, a lot of sponsors, a lot of the equity investors in these projects, and this is something we heard on a few panels, they're like really, really worried about whether or not they're going to be able to get their money back. And, that's something we touch upon the report as well. And a lot of these are international investors. So another thing that this report says, you interject and ask me questions as I go on, but we talk about some of the things that the OBBBA OBBBA does. We talk about like the safe harbor. We really go into the dynamics of that legislation and how it affects the renewable industry. And then we talk about international investment. Obviously, the U.S. electricity growth story, it's kind of like the envy of the world. I mean, we have just a tremendous amount of data center development, electrification, a lot of people onshoring of manufacturing, a lot of people want to get exposure to U.S. energy growth. Now, this report ends in 2025, but I'll just tell you, in 2026 Q1, and this is a number, this is my number, this is a number this is my headline number, there was $93 billion raised by utilities in debt and equity markets. This is the most ever in any quarter. And then if you look at IPP M&A, it was $52 billion.
Yeah.
This is the most M&A in the IPP space, independent power producers, ever in any quarter. Now, a lot of this is kind of, you could say one time, there was a lot of things that happened in PJM. There was this acquisition of Calpine by Constellation, right? And so part of that is that they had to sell some of their PJM assets so they didn't have too much market concentration. So that was something that happened in PJM. But it's still a tremendous amount of money. And it shows just the interest. So one of the things we go in the report is we kind of look at all the international investors that are pouring in to the United States. Now, you can imagine some of them are familiar names to people in the energy space. But for example, a lot of that money is coming from Brookfield, Canada, RWE, Germany. We've had some RWE folks here at the conference. Enel from Italy, Iberdrola from Spain. We had someone from one of Iberdrola's company, Avangrid, yesterday.
Yeah, he spoke, the CEO of Avangrid.
Yeah, EDP, CPPIB, Engie, EDF, Ørsted, Omers. These are huge companies that are pouring billions of dollars into the United States grid, and a lot of that money is focused on renewables. And one of the things that we track is how this has changed over time in the report.
Yeah.
So initially, the thing that was most popular, because it is, often higher capacity factors, is wind. Now, so that was maybe wind was the story about, let's say 3+ years ago. Now we're seeing that transition to solar. I think solar is starting to take kind of more of the lion's share of investments in battery as well. So these are some of the insights that are coming from this report. And then, there's some other insights. We talk about tax equity. We throw out the number that tax equity accounts for 45% of the capital stack for new solar and wind projects for 2025. Sure. But, this is a huge rush to build. Sorry.
No, I mean, that's a great point. It's a huge rush to build, right? Everyone wants to take advantage of the 30% ITC. They're safe harboring. That's why you're going to see probably in 2026 more solar and storage penetration or solar penetration than you have in prior years, because everyone wants to get the full incentive.
Yeah, it's there's a huge just demand for electrons, and I think there's so much pipeline. When you look at energy, when you look at some of these developers, and you're a developer, so you would know you have the projects that are operating, and you have your planned projects, you have your pipeline, and like there's some companies where the pipeline might be 75%, and they're like looking at that and they're like, we need money, we need it fast, we need to build, and so I think it's going to be a busy year.
For sure.
And the other thing that I worked on personally that I really like about this report, and it's something I worked on like months ago, and it's kind of like has legs of its own as an analysis.
As the principal analyst.
As well.
Sorry.
No, I like that. I shouldn't have said that. I shouldn't have said anything. I thought it was gonna be like a cute little quip. I was just trying to be funny. But so one of the places where they really want to develop renewables is Nevada.
Oh, you were telling me about this yesterday.
About the Bureau of Land Management?
Yes. This is interesting. You should definitely.
This is a very interesting thing. So when they started announcing, so basically the DOI, the Department of the Interior, announced these rules, and they said we're going to start evaluating projects on our land based on energy density. Now, what does that mean? So it's like how many megawatts you're producing based on the land that you're producing it on.
Yeah.
So what does that favor? Well, it favors very kind of condensed projects. And what's the most condensed is think of a vertical structure with some turbines in it, right?
Mm-hmm.
Gas, coal. Those are the most, if you look at their tables, those are the most energy dense. Nuclear. Nuclear. You never want to say nuclear.
Yeah.
Nuclear. Just for the record, I said it right. And those are prioritized. And then further down the list, you have geothermal. Geothermal is seen as energy dense. And then at the bottom, you have solar and wind,
mm-hmm.
which is interesting, right? Because it's just looking at the footprint of the power plant itself. You could argue that there's quite a few interesting holes in that methodology, right? You only need a certain amount of space for the power plant, but what about the space you need for the coal mine or for the gas field, right? So you have to kind of think of the holistic space that's used for a project. When you look at solar, I mean, you have a factory that's producing the stuff, and then you have the solar farm, right? So if you kind of think of it holistically, there might be, the energy density thing is an interesting question, but this is beside the point. What we looked at was the projects that are at risk, that are on Bureau of Land Management lands. So within the DOI, you have the BLM, the Bureau of Land Management. It's like a federal organization that manages a lot of land that is more or less west of the Mississippi.
Mm-hmm.
And a lot of that is very, very high solar irradiance. Some of it is very, very high wind. So I think there's some land in Utah
mm-hmm.
and Oklahoma that's BLM land where there were some wind projects being planned, but a lot of it's in Nevada, a lot of it's in Arizona, a lot of it's in New Mexico. And the risks that people are having if they want to build on BLM land is that the projects are going to get canceled.
Oh, okay.
And so this was because of this energy density evaluation. So we talk about this in the report. And so one of the interesting insights is that I think 90%. So I did this geographic analysis. I took all of the projects by their GPS coordinates, and I graphed them onto BLM lands.
So
see
what's
where they
BLM?
So Bureau of Land Management.
Oh, back to that Bureau
of Land Management. And what we found was that 90%
mm-hmm.
of projects in Nevada. Now, why does this matter? 90% Nevada. Reno and Las Vegas are set to be some of the biggest data center hotspots. I think if you look at the top 10, I think Reno and Las Vegas are in there as in terms of where capacity is being planned in the United States. They need power. I forgot the Berkshire Hathaway company that runs Nevada's grid, but it's NV Energy or something.
Oh,
like
yes,
that.
that's right.
They need power, and it's a great place to build solar if you can build it.
Yeah.
And I think this is going to be, this is another kind of problem. But the report is super comprehensive. I mean, a lot of this is in there. Some of the other things that we try to get into is kind of the share of utility scale versus behind the meter. Behind the meter is something that's being discussed a lot. So that is, you have a data center, and there was a panel yesterday that discussed this explicitly at the ACORE Finance Forum. That was I think it was Switch and Copia Power. And these are kind of give the shift to the vertically integrated hyperscaler where they're both doing the data center and they're doing the power generation.
Oh, interesting.
And the issue why people are doing this is because it's very hard to get a good timeline for connecting to the grid. It's hard, energy developers will know that it takes a long time to interconnect your power project. Sure. To put power, that's just adding power to the grid. Now imagine, so that's the plus side. A data center is the negative side. So they have to do the same kind of planning. If you want to, if you're in Texas and you want to take, some of these projects are we want a gigawatt of power.
Yeah.
That takes a lot of planning. That's going to be just as disruptive to the grid. They have to plan around that just as much as adding new load. Mm-hmm. I mean, just as much. They have to plan around it. I'm not at the ERCOT kind of staring around these graphs and trying to figure this stuff out, but it takes a while.
Oh, for sure.
And so that's kind of incentivized people to just kind of buy land and try to do everything themselves with the hope that they'll interconnect eventually. And one of the things that's one of the things that's kind of been incentivized by this is gas.
Mm-hmm.
So a lot of hyperscalers are looking at gas. They're connecting to gas pipelines.
Oh, okay.
They're buying gas generations. A lot of people talked about a project that Meta and Blue Owl are doing called Beignet. This is in Louisiana. This is like a $23 billion hyperscale, like data center project, but it has integrated gas. Now, why would you do this in Louisiana or Texas for that matter? Is because, it might take you 5 years to get interconnection from the grid.
Mm-hmm.
It takes you about 1 or 2 years to get interconnection from a gas pipeline.
Yes.
So you're going to start seeing, this is one of the things
that's
now that
interesting.
The problem here is that it's people are, and we talk about this in the report, there's timelines for gas turbines. People aren't able to get these super quickly, but that's been a big boon for some of these new entrances like Bloom Energy.
Sure.
Some of the other, like Doosan, some of these other kind of smaller gas generation providers.
Sure, that makes sense. And then, Bloom's been around for a while, but it's interesting how they've adapted their business model from a fuel cell.
Right. It was hydrogen.
It was hydrogen, yeah.
It was hydrogen. So they have a solid oxide fuel cell technology.
Yeah.
I actually have a report on this, not in the ACORE report. We don't talk about this at all in the ACORE report.
Yeah.
But they were originally a hydrogen company. They had a solid oxide fuel cell technology. And they were like, hey, they were building, they have like hydrogen projects. But originally they were like building at like Home Depots and like Costco's, right? It's like emergency power.
Yeah.
These little brick looking things that they put like beside a Home Depot, kind of as like a backup generator. And they, with the kind of boom of data centers, they've really kind of been a darling of the story. And they're talking about expanding their manufacturing capacity. And I guess, the other ones, you have Fuel Cell Energy, which is based in Connecticut. Mm-hmm. That's another fuel cell company. You have Doosan, which just acquired or did some deal with Ceres, which is like another fuel cell company. So those are like the big three fuel cell things. I think that's like an interesting direction for data centers. But, we really kind of like to bring it back to the renewables, to the big three, wind, BESS, and solar. I think there's still an immense amount of interest in building these assets.
Yeah.
Because we know how to do them well now.
For sure.
Right? The costs are only going down. And you can put them up quickly. I think the timelines to build a gas plant are really long.
Oh, I know. Over 10 years easily.
Yeah. So I think it's, we talk about
solar is the fastest resource to put on, energy resource to come online.
So this ACORE paper actually gets into gas as well. So we really do, it's very comprehensive. And it's like we're getting into the gas-fired additions by region. We're looking at what projects, where they are in their kind of development stage, whether they're proposed, under construction, under development, how many have been completed. So it's very kind of comprehensive in terms of this report's ability to kind of look at the entire market. And then we also talk about nuclear and SMRs.
Oh, awesome.
And where those are going. So it does a heck of a lot. Mm-hmm. And it's like, it's kind of a fun project to put together. And it was a real pleasure to work with ACORE. I think, they clearly are really interested in providing their members really comprehensive research and kind of narratives to go to the market with that, so that this industry can be one of the leading industries in the United States.
Yeah.
And, and so the United States can be one of the leading renewable jurisdictions in the world.
In the world, for sure.
And, I think that can only happen if ACORE is successful in their mission.
Yeah, definitely. No, I agree. This is a great report. I saw the press release that ACORE had about it. Is there any way of getting direct access, or is it just through the press release, or it's for pretty much SMP clients, or?
So no, this is ACORE's paper, and So there's the press release there. I think there's going to be a formal launch.
I think they said next week, right?
Yeah. So
Just the
they're,
formal.
They kind of teased it at this conference. But they're stretching out, I guess, all of the public engagement they can get with it. But it's, hopefully one of many that of collaborations we can do together between S&P and ACORE, because it's a really fantastic opportunity for us to kind of utilize a lot of S&P's proprietary data, our really crack team of consultants, and ACORE just has like such an impressive, I guess, foothold in the market and such passionate members, and some of the board members were speaking, and they're like I think one of the fellows' name was James Wright. And he's a managing director at CIBC. I think he's a board member at ACORE, and just kind of like the caliber of leadership that ACORE kind of brings together is really impressive.
Oh yeah, it's definitely impressive. I met so many senior people in the industry. Obviously this past conference, and it's amazing to see. Just as you mentioned, like every panel was mentioning FIAC. Going back to some of the earlier points you made, I mean, it's huge that you could get the ITC for energy storage.
Yeah.
And then it goes out for another few years at the 30%, which, as you mentioned, like higher pricing will be more competitive with China, which, the Chinese companies really have most of the manufacturing of energy storage.
Yeah.
At this point.
It's energy storage has so much potential to unlock both innovation in the grid, but also like really address some of like the key affordability concerns, because there's parts of the day in a lot of places in the country there's negative net demand. You've an abundance of solar, so much so that you could get paid to take electricity.
Interesting.
Right? This is the idea of the duck curve, right?
Yes.
And the sunniest hours of the day, you have negative net demand.
Yeah.
Right? You have more being produced than is being taken, and electrons have to be curtailed.
Yeah.
Like people have to be like, and if you look at California, it's both wind and solar being curtailed, and a lot of regions, like in SPP, they're curtailing wind. There's just so many electrons just being wasted. They just have to like, I guess, ground it.
For sure.
And with battery, it's like, and the other dynamic is that when the sun goes down or the wind stops blowing, the prices go up.
Yeah.
So you have this situation where if you have storage, you're just able to like shift those electrons 1, 2, 3, 4, maybe up to 8. We might have 8-hour lithium batteries soon.
Yeah.
Like kind of that scale. You could deal with the negative net demand, and you can deal with the higher prices later on, and you can have cheap, clean power, 24 hours,
reliable,
7 days a week. And so that's the promise of battery. Transmission is such a major enabling part of the equation, and it's not often talked about. It's huge amounts of money that goes into transmission and distribution, and it's a huge amount of opportunity for distributed generation. It's a huge amount of opportunity for utility. So if we actually look at China, one of the interesting things that they did is they built these power lines actually before they had the generation to put in them.
So
they built, so a lot of the Chinese generation is in the western part of the country, in the more deserts, more arid, sunnier, windier. A lot of that is in the northwest. Where is the consumption in China? The consumption's on the coast. It's on the east. So they built these huge power lines to go east-west, and that was kind of this enabling feature of why they're able to produce energy so cheaply, and why they're able to have so much renewables. And there's a glimpse of that in the United States. And I think one of the projects that's not talked about enough, frankly, is called SunZia. And it's just such an incredible project. I think altogether was $11 billion. So Pattern. This was Pattern. This is the biggest renewable project in U.S. history.
Yeah.
And it was led by Pattern, which is a CPPIB company, Canadian pension plan investment board,
Mhm.
and they they raised a ton of money, and I think the breakdown is it's about almost 50-50 the money goes for a transmission line, which is merchant, and it takes New Mexico wind. So there's not a lot of consumption in New
Yeah.
Mexico. I mean, there's some, but not like, it takes like, I think it's like 5 gigawatts of New Mexico wind
Sure.
and sends it to California.
Oh, wow.
So
That's
it
a
crosses
long
3 states. And I think like these kind of projects, like if we really want to enable renewables at scale and kind of bring in billions of dollars and really transform the grid, we need to start thinking more seriously about transmission. The report gets into
Yeah.
that as well.
No, this is pretty comprehensive, and this has been like an amazing interview. I can't believe like 40 minutes have gone by in a very short period of time. Is there
Yeah.
anything else that we should know about this, or any of your takeaways from the ACORE Finance Forum? One thing that I would say is I think it's really important that you mentioned before that the ITC, obviously I meant at 30% for energy storage, the extension related to that. Then also they kept transferability as well, which hopefully simplifies.
So, yeah, I think, the I think it's like the focus. A lot of this has been on tax equity. This is what's on people's mind. This is a real pain point for people as they're starting to look at the evaporation of these credits,
Yeah.
and kind of like a lot of people have talked about this tax equity cliff. I mean, you're having to some extent like the government subsidize renewable energy. And I think we're actually kind of approaching a stage in the development of renewables where it could potentially be where the market fundamentals are so strong, where the demand is so high that you can actually build like agnostic of government subsidy. And I think I think the point of tax equity, I think initially was to kind of provide crutches for an industry that was learning to walk.
Yeah.
Or training wheels for an industry that was learning to bike. I don't know. You choose your metaphor. But I think, the hope is in my mind that we start to have the more comprehensive and difficult conversations about what the renewable industry looks like post subsidy.
Yeah.
Because I don't think you can rely on. I think this is the conversation. It's like, can you really bank on, should you be really banking on markets that are totally bolstered by government subsidies?
Yeah.
So it's like, and this is why I think hydrogen ultimately failed, because there really wasn't any way to have a path forward past subsidy.
Sure.
Where the costs were just too high to some extent. And I think, and then, as you go, as you think harder about that question, what are the difficult conversations we need to have? Like transmission, these things that take a really long time to build. How do we get that right? Because that seems to be a problem. There's certain markets that are building a lot of transmission. And there's certain markets that are building hardly any.
Sure.
It's like, how do we get these miles of wire built?
Yeah.
And how do we bring down costs of developing projects and bring down timelines of developing projects? I think there's a lot of more substantive policy conversations that need to be had, and this is one of the places where they're doing them.
Yeah, definitely. This has been an amazing interview. I appreciate, James, you making the time. If our audience wants to learn more about the group that you work at S&P, or wants to connect with you or learn about YP in New York City, what's the best way for them to do it?
So I published a lot of my stuff I post a lot of stuff on LinkedIn. So it's LinkedIn, I think, /James Gutman.
Yeah.
I published a Cap IQ. So if you have a Cap IQ license, you can read me there. YPE has multiple events every month. I
Sure.
go to a few of them. so you can meet me in person there. My email is james.gutman@spglobal.com, and I'm happy to chat.
Yeah, definitely. And we'll have that at the notes of the podcast. I appreciate it. There's so much discussion that has to continue. And obviously, I think a lot of people are getting ready for a non-government incentive world when it comes to specifically solar. So that was interesting, like final point that you made. And obviously, solar doesn't really need incentives at this point, and it keeps getting cheaper. So that's a great way to kind of end the interview.
Awesome. Well, thank you, Benoy. It's been a pleasure.
Yeah, thank you. I
Great
appreciate it.